Investing can feel precarious right now between stubborn inflation, a volatile stock market, and looming geopolitical risk. But remember what mattered the most, your long-term financial outcome, not these short-term challenges. To help you stay invested, here are 3 great ETFs to help shore up your portfolio defense against the current market volatility. First up is Vanguard Short-Term Inflation Protected Securities ETF, ticker VTIP or VTIP, which has a Morningstar Medalist rating of gold. Inflation-protected securities, or TIPS, protects against inflation by adjusting their principal value upward as inflation picks up, get a higher periodical interest payment as things get pricier, and if the inflation persists when these bonds mature, a higher principal payment as well. TIPS also carry very little credit risk. They are a type of Treasury bonds, which mean they are backed by the full financial power of the US government. Adding short-term TIPS to the portfolio, such as VTIP, can help your returns keep up with inflation without much additional credit or interest rate risk. On the equity side, silver-rated SPDR, MSCI EAFE StrategicFactors ETF, ticker QEFA, is another defensive ETF option that targets international stocks. It captures stocks from developed markets that exhibit value, quality, and low volatility characteristic. The combination of these factors dial down the fund's risk level and zooms in on profitable foreign firms that insulate themselves well from the ups and downs of the market. QEFA's defensive stand is its offense. The ETF beat the MSCI EAFE index by 50 basis points annually between the 2014 inception and February 2025. While that might not seem like much at a glance, it has consistently shielded investors through market shocks in the last decade. Global-minded investor can rest easy knowing that this high-quality, low-volatility ETF will lessen the blunt of foreign market wobbles on their portfolio. And finally, bringing us to the home stretch is gold-rated Vanguard Dividend Appreciation ETF, ticker VIG. This ETF sweeps in US stocks that have increased their dividend for at least 10 consecutive years. The result of such a strict requirement? A lineup of stable and profitable market giants, the like of Microsoft or Procter & Gamble. They tend to be more profitable than the broader market, have a wide economic moat, and yet, on average, not much more expensive than a typical large-cap stock. VIG has outperformed the US stock market during some of the worst crises in recent history, from the 2008 financial crisis to the 2022 market meltdown. This high-quality portfolio will guard your dividend payout and your returns too.